we will still move that mortgage process through, providing that we can determine that that layoff is temporary, that they'll be back into their position with the same title and the same income. So, we're allowing to move forward. And I even have a mortgage option specialist who is assisting people with mortgages as well.
Mm-hmm.
And he's got lenders that will even help people up to a full year.
Wow.
The interest rate is going to be higher, but it's temporary.
That is true.
And then when you get back on your feet, you can get yourself into a standard mortgage at a better rate.
Excellent. And then we have 2 questions from Wissem. I hope I'm pronouncing that correctly. I apologize if I'm not. So the first is, why are banks still maintaining the necessity of an appraisal, although many clients are declining their mortgage request? I don't know.
I'm not sure, but I know in the mortgage industry, we have to have an appraisal. We have to know the value of that appraisal. I'll give you an example. Say, for instance, if someone has a 5% down payment, an appraisal will come in, and we use that figure to calculate loan to value. So the loan is the amount that the client needs to secure, divided by the appraisal value that we receive. We consider those appraisals to be accurate.
Okay.
So we take the mortgage amount, divide it by the appraisal, and then we times it by 100, because we want to convert it to a percentage. So if someone's putting 5% down, our percentage should be 95% loan to value. If it's exceeding that, the evaluation comes in lower, then a couple of choices. More down payment has to be put down, because the minimum we'll take in is a 5% down payment. Or I'll have to guide that client to my coworker who looks after unique circumstances. So it's still a possibility to fund that mortgage, but loan to value is extremely important. That's one of the #1 formulas that we use for determining a mortgage acceptability.
Okay, and further to that, Wissam also asked, bidding wars are a big problem to buyers and impact directly the value versus the appraisal. So how flexible are banks?
They're fairly flexible. They work within a percentage or a range. I don't know that right offhand, because that's sort of back office, and it is the underwriters who assess the entire risk. But Lambros, I don't know if you've had this experience. You could actually have your realtor put a clause into the sales agreement, and this will help negotiate the purchase price if the appraisal comes in less than what you're willing to offer.
Okay.
Yeah, I mean, there's certainly a clause like that, but it's not widely used at all.
No.
We don't see that, because typically sellers, for lack of a better word, they remain stubborn. So they really wouldn't want to renegotiate. They'll say, that's the buyer's problem. And I mean, that's usually what happens out there.
Yeah.
So the buyers have to ante up. That's why it's very important. And I don't want to step on your toes, Nancy, or get into your line of work, but what I always tell my clients is that, okay, that's fine. You've been approved for, say, $900,000. Doesn't mean we have to buy up to $900,000, right? Maybe we buy a little bit less, just in case that appraisal comes in a little bit less, right? So,
or they want to get involved in a bidding war as well. They know what their range is.
Well, absolutely. But still, regardless of what the situation is, I don't recommend that clients buy up to the top end of their mortgage pre-approval. Yeah.
That's good advice. So I know that there's a question geared towards you, Lambros, from Oscar.
Okay.
So it's, I invested in a property and gave $45,000, I presume, as a deposit, and I will get the property in a few months. Should I go ahead and continue with the deal, or cancel and lose my money, just thinking the price I bought could be now lower?
Okay, very good. And before I answer this question, I apologize for the interruption there. I'm not sure what happened. I guess I was streaming it on Facebook and it can't handle it. So I've stopped the streaming on Facebook and things seem to be okay now.
Overload.
Exactly, overload. So Oscar, again, thanks for the question. I mean, we touched on this briefly earlier when we talked about not being able to get out of agreements. I mean, obviously, I'm not your realtor and I can't advise you as to what to do. But typically speaking, once that agreement is signed, it's binding. You can't really get out of it because you think prices are going to come down. We saw this situation in 2017. And that's when prices did take a hit. But that was a different situation, right? We still had a ton of listings out there. We actually had a flood of listings out there, but buyers were sitting on the fence. So we had demand go down and supply go up. That's what caused the price drop. In this situation, we're seeing both supply and demand go down. So I don't anticipate prices being dropped. And I wouldn't put myself, if I was in your position, I wouldn't put myself in a position where I'd be losing $45,000 and potentially getting sued by the seller just because I'm thinking prices will go down.
And to add to that as well, if you do back out of the deal and thinking you're just going to lose the deposit, there's a very good chance that if they end up selling the property for less, that they'll come after you for that difference.
Exactly. Yeah. Yeah, that's right. That's right. So we have, did we get through all the Q&A stuff? I know there's...
we have a few more.
Okay. Barbara, you're doing a good job there. And so I'll allow you to continue on with that.
Okay, great.
Sure. Yeah.
Let's see. So I have a question from an anonymous attendee, just fine. We are in the process of buying a new build. Pre-COVID, we had appraisal done on existing and future property. Now do we need to redo appraisal and mortgage application post-COVID? Nancy.
Okay, let me give this some thought. I'm going to reread this.
Yep, I did read it pretty quickly.
Yeah.
We can come back to you.
Yeah.
Now. Or...
Yeah, like I just like to know, I'm wondering who did the appraisal. Was the appraisal through a bank or whoever they were dealing with? Was the appraisal a long time ago? There's some details, I guess, that we would have to determine.
Mm-hmm.
So we could always take that offline if you need to.
Yeah, we can take that offline and they can, I don't know who they're dealing with right now, but I'm more than happy to accept an email from them and we can talk further.
So anonymous attendee that asked that question, we will be providing our contact information at the end, so you can use that. Let's see, another question is from Michelle. Good evening all. Good evening, Michelle. I'm about to sell my house, but I gather it's best to defer until the COVID-19 is over. How far should I defer selling my home? Thank you.
Michelle, I don't want to make light of the situation, but I don't have a crystal ball right now, so it's very hard to predict that. All I can tell you is that if you don't have to sell right now, then best to wait. Maybe 6 months, you know, maybe longer, I don't know. But all signs indicate that this thing will be done by the summertime, hopefully. And then we're going to see, you know, buyers jump back into the market because there's a lot of pent up demand. Don't forget, right now should have been the hottest time of the year to buy and sell a property. So a lot of buyers were saying, okay, we're going to get out there in the spring, buy a house. A lot of people are saying we're going to put our houses on the market in the spring and sell it for top dollar. Now everybody's got to wait, or most people have to wait. So I think once this is over, we're going to see a very strong fall market. September, October, which is still a traditionally not good period to sell houses, and the weather's still good. So if you can hang in there for about 6 months, just play it by ear and talk to your real estate agent and come up with a plan.
And a question from Elizabeth, who seems to be along the same lines. So it's better to wait to sell a house in this economic situation. If the economy does go into crisis, do you believe the house price will go down dramatically?
Yeah, Elizabeth, hard to say again, but again, I said it earlier, I'm going to say it again. Houses here in the GTA, they have a remarkable ability to maintain their value. The closest thing to this I'm not going to call it a recession because we did have a recession back about 12 years ago in 2008. And during that period of time, house prices only came down in the GTA about 6%, right? If prices go down now about 6%, that only takes us back maybe 3-4 months, So it's not, I don't think there's going to be a dramatic decrease in home prices. So it's probably best to wait. I mean, if you can't wait, then obviously you put your house on the market now. But then there's always that perception of if you're selling during this period of time, then you're desperate to sell because you have to sell. So, I mean, it's a balancing act. So again, I would suggest to you talk with your real estate agent and come up with a plan. If it makes sense to sell now, then put it on the market now. If it makes sense to wait, then wait it out.
Great. Thank you, Lambros. And I think we have another question that's probably more geared towards you. It's from Ken. He says, what will you advise someone who is contemplating entering into a contract to pay a down payment of 5% and the house will be ready in a year's time from now, or just go ahead and buy a property outright now? He's talking in terms of price.
Okay, good question, Ken. So I'm assuming that you're thinking about buying a pre-construction home or rebuild. When will you? Sorry, just let me reread this question. Again, hard to say, Ken. As I said to Elizabeth, I don't think prices will come down dramatically. They may come down a few percentage points if this thing goes longer than the summer. So, I mean, if you absolutely have to buy something, then buy it now. There's construction delays though as well. So if you need to get into that property in a year from now, there's a chance that you may not get in there because we are seeing construction companies and developers push out their closing dates as well. So that's also something to consider.
To add to that, yes, because the construction work is now no longer considered essential. So people aren't even on sites to do the work.
That's right.
And on top of that, Tarion has allowed that builders can unilaterally extend critical dates.
Yep.
So it's a very frustrating time, I imagine, for people purchasing pre-construction.
Yeah.
You have to always factor that in. There's so much more involved with pre-construction. There's a lot more closing costs. There's a lot more due diligence. So if you are thinking pre-construction, just know right now that the market is obviously saturated, but there is a delay, and it's going to be interesting to see how that evolves over the next few months.
Yeah.
Okay, and let's see. I have another question here from Noreen. Hello, Noreen. You've said the courts have allowed us to execute documents via video conferencing these days. I'm wondering if you're referring specifically to the one that came out, or the judgment that came out recently. Is the same true for banks and real estate transactions? So, Nancy, do you want to give that a go, and then I can add in my perspective?
Okay, sorry, I missed that because I was just typing off an answer to another question. Okay, so hi. The courts have allowed us to execute documents via video conferencing today. Okay, so you're asking if the banks are accepting conferencing video.
I think too, maybe Noreen's asking from the context, the documents that you provide to the lawyer, maybe, are those documents okay to be done via video conferencing?
Okay, so I know with CIBC, because I'm with CIBC, and so I'm involved with CIBC's products and services. And we'll do most of everything remotely. However, CIBC is not accepting signed documents via conferencing at this time. So their instructions to the lawyer is to have the client make an appointment with the lawyer. And this is important because usually when you're working with a client on a mortgage, you always want to visit and see them face to face at least once. And this is to validate who you are. And we'll leave this to the lawyer to do that because right now we're keeping social distancing.
Noreen, I was going to say, well, not Noreen, pardon me, Nancy, I was going to say that Noreen added, it's like independent legal advice for a refinancing involving a separation agreement. So there is a legal component to it, certainly, but how is the bank with regards to independent legal advice? Do you want that to be done in person? Would you say
Legal advice?
independent legal advice? Yes. Not representation, advice.
Well, that would be up to the client and their lawyer that they select. You know, I don't really have an answer for that besides what I've just mentioned.
Yeah. Okay.
Our concern is just at the final stage that we need the client to visit the lawyer.
Yes. So, Noreen, I know from my experience with CIBC right now, they are requiring physical presence with the client. So I would suspect in any situation you need to be doing it in person as opposed to conference. It's the same with Bank of Nova Scotia. I have not received, I've received instructions from First National as well, and they do also say physical presence. So it's just very dependent on the bank naturally. But I'd say within the context of ILA and a separation agreement for refinancing, I know my perspective on it would be is with a CIBC or BNS or First National. In this instance, I would probably meet with the clients.
Oh, getting a lot of questions coming in now.
Yeah, so I see that Noreen has quite a few questions. If it's mortgage related, I'd be more than happy to take this offline and go in more detail via email or via phone call. And we'll have our contact information up at the end of the webinar.
Do you want me to, thanks, Nancy. Do you want me to tackle Greg's question?
Yes, let's go for it.
Okay, so Greg is asking, do you have any insight to house prices dropping in more low-income areas due to income issues in the East 401 belts? I'm assuming Scarborough, East End of Toronto, maybe Durham region, and GTA buyers flooding the market even more than they already are. It's a good question, Greg. Certainly, real estate is very specific and very local, so different pockets will drop more than others. Others will maintain their value, certainly. And I do expect a number of the buyers to jump back into the market once this is over. Maybe some will take advantage of less competition now to buy something. But overall, I don't expect prices to drop significantly. As I said, during the last recession that we had 12 years ago, they only dropped about 6%. I don't expect that to happen now. Another bank, I'm not going to mention which one, said that prices may drop maybe 2.7 or 2.9%, right? So, but that's worst case scenario. That's if this thing drags on for more than 6 months, right? Which I don't think it will. Yeah, because I'm hopeful that things will improve by the summertime.
Yes. So we have a question from Emma. I believe this will be for you, Nancy. I have a mortgage less than $100,000 on my recent house. My house is worth $380,000. I was thinking to buy a second home to move in, then rent my current home. Now that I don't have a job, is it possible to get a mortgage?
Depending on the type of job you have, it's possible to get the process started. So if you know that you'll be going back to that job with the same income, then it is very much a possibility, but we would have to calculate loan to value, and we would have to find out what kind of income's coming in. Right now, because the CRA has pushed back tax time, we are going to be looking at the years 2017 and 2018. So we look back 2 years to gather information on income. And that's how we're handling it right now. So if we're not going to immediately discourage anyone. There are so many different options out there. If I'm unable for whatever reason to secure a mortgage for somebody, I will work with my colleague, John, who's a mortgage option specialist with CIBC. and he can put together mortgage funding with very unique lenders based on a very unique situation.
Great.
Good. So I see one
Okay.
of our, oh, you done? Yeah.
I don't, I think,
Oh, okay.
go ahead.
Okay.
You might have seen something.
No, I actually see one of our audience members has raised her hand, and I know her quite well. So, Angela, if you can hear me, I can allow you to talk right now. So I'm just going to unmute you, or you can unmute yourself. You can unmute yourself there if you wish to ask the question, or you can type it into the Q&A or chat box. Let me see if I can unmute you from here. Yeah, I think you may have to unmute yourself.
Oh, there we are. There we
you
are.
Yeah. Welcome, Angela. Can you hear us? Might be having some technical issues. Okay, sorry, Angela, we can't hear you. So please type in your question and we can do our best to answer it. Thank you. Okay, I think that's it. I don't see any other questions unless there's...
I believe we had a question asked yesterday about, and this goes back to agreements of purchase and sale,
Okay.
and how interruptions to them due to COVID-19 are going to be dealt with legally.
Okay, great.
It was specifically, it was asked, would this be considered, so this meaning COVID-19 or the effects of it, be considered an act of God with regard to the inability or delay in selling a property?
Oh, good. Yeah.
So that is an excellent question, because I know that in quite a few new build contracts, at least, there are act of God or force majeure clauses. For those that might not know, an act of God or force majeure clause excuses the performance of contractual obligations if certain events happen outside of each party's control to the agreement that prevent those parties from the performance. So if that's long-winded, I apologize. But in this instance, when you have an agreement where something has happened, this clause is usually relied upon by the breaching party, who will have to establish that a force majeure or an act of God event occurred and prevented the completion or their completion of the agreement. Having said that, there is no force majeure contract in residential agreements of purchase and sale, the ones that you see from CREA. So you cannot rely on that as a defense when you have a typical agreement of purchase and sale. You could attempt to rely on, good question, Sam, what is a force majeure? So like I said, a force majeure is an act of God, and the other term is force majeure. So if you can also use act of God, they're interchangeable. But I will explain that. But essentially with residential agreements where there are no force majeure or act of God clauses, you can try to rely on the common law principle of frustration. This is an equitable remedy. However, I hate to say it, but it's extremely limited in scope. And if you had a force majeure, you might be better off. But again, that is also limited. So you, like I said, you're more likely to see this clause in new build agreements. Again, Sam, so this is what it is. I'm going to try to lay it out more simply. No offense, because I did say it really, really interestingly before. So they allow for the termination or postponement of a party's obligations of the contract. Events occur that are outside the control of the parties and that make complying with the contract impossible. So it means something happens external to the contract that means the parties can't actually make the contract work. So whether or not you can rely on that clause in your agreement, if it is there, is very much contract specific, and you might wonder why. Frankly, there is no boilerplate or standardized clause for force majeure clauses. Some of them will cite diseases, plagues, epidemics, or quarantine restrictions, and others will just say acts of God, which is interpreted to mean natural disasters, fires, floods, wars. So you need to ensure that if you are going to try to rely on that, that the scope and applicability of the clause is pertinent to your situation. But lastly, the courts would like to see if the risk of not being able to completely close the I can't speak, transaction was foreseeable. So they will look to see if the event itself actually means the contract couldn't be foreseeable or couldn't be completed. And they want to know if it could have been mitigated in any way. So the kicker here too is just because it might cost you more to complete your obligations under the agreement, or there's a delay, doesn't mean it couldn't be completed. So then you can't rely on that clause. It's not ideal. It's, again, like I said, it's limited, and frustration is even more limited. So if you do have questions, if you have an agreement where you have a force majeure clause and are hoping to see if you can get out of it, you're hoping to see if you can do something about that, definitely contact your lawyer, contact me. I'd be happy to chat with you about that.
Great. Okay. Have we gone through all the questions?
I think so. Any last minute questions,
Okay.
anyone?
We spoke to Emma's question as well, right?
Mm-hmm.
Okay, perfect.
I think there was actually a question.
Oh, there's one just.
Basis, how would commercial real estate be impacted when all of this is done? Lambros, is that your area? Could you?
I'm sorry, where is that?
It's further up in the webinar chats. It's above.
Who's it from?
It's from Mathews. I hope I'm pronouncing that correctly.
Oh, okay, sorry, I didn't see that one.
Mm-hmm.
Oh, Mathews, how would commercial real estate be impacted when all this is done? Wow, that's a very good question, Mathews. You know, it's anybody's guess right now, but I mean, with a lot of businesses, you know, having to shut down, you know, commercial real estate may be affected by this if they can't, you know, get tenants in there. So it's hard to say. I mean, are you asking from a buyer's perspective or a seller's perspective or a landlord's perspective or a tenant's perspective? I'm not sure. But if you want, we can definitely take this offline, because that's a whole, you know, can of worms that we can discuss about the commercial real estate. So shoot me an email, Mathews. I'd be happy to have a chat with you and even, you know, refer you to a commercial specialist. Yeah.
Great. Okay, let's see.
Okay, so Angela typed her question here.
Yeah.
Right now, you need to have about 25% of the purchase price and good credit rate, of course, in order to buy a house. Do you think that banks or mortgage companies might be less strict in their criteria when the COVID-19 situation is over, since many people have suffered financial losses during the coronavirus period? That's an excellent question. I'm not sure. I'm going to pass that on to Nancy.
Sorry, I'm reading something else.
Yeah, it's okay.
Multitasking.
I don't. My gut is I don't think so, because banks have to protect themselves, and
What was the question?
So right now, Angela is asking, you need about 25% of the purchase price and good credit rating, of course, to buy a house. She's wondering if banks or mortgage companies will be less strict in their criteria when COVID-19 situation is over, since many people have suffered financial losses during the coronavirus period. Before you answer that, Nancy, I'm just going to throw my hat in there and say probably not, because I mean, I know that banks and mortgage companies have to protect themselves as well. They're not going to put themselves at risk of people defaulting on their mortgages. But take it away, Nancy. Go ahead.
Well, I believe they mentioned 25%. So the minimum down payment is 5%. For a home up to $1 million. Anything over $1 million, then it'll be minimum 20% down payment. So I'm not too sure about the 25%, where that's coming from. But there's CMHC, there's other companies out there that insure mortgages that are below 20% down payment.
High ratio mortgages, correct?
Yeah, high ratio, correct.
I think the 25% may be just something that speaks to affordability, right? So if somebody, every situation is different. So some will qualify with 5%, some may need to put in more than that. So, yeah.
That is true.
Yeah.
All right, let's see.
Yeah, and again, I'd be more than happy to have someone send me off an email and get more details from them, and then I can answer the question more correctly, fully.
We've got 2 questions in the Q&A, 3 right now. So Hong is asking if the offer is originally signed by husband and wife, but the buyers decide to amend the APS to the husband only, is the wife still on the hook? Well, that's
Well,
a legal question, I think.
I would say, based off that and no other information, if you're amending the agreements to remove a party, that party is no longer in the agreement. So the wife wouldn't be on the hook. No. If there's more to that question, shoot me an email.
I'm sure there is. Yeah.
Yeah.
There's got to be more to that question.
Yeah.
And Jen is asking, I am selling a house with HELOC, portion fixed, portion available. Can I change to a mortgage without enduring prepayment penalty on fixed portion? Nancy?
Okay, so the fixed portion, I was sort of trying to type that out, but I'll answer it live.
Yeah.
So anytime you have a fixed anything and you want to make a change, yeah, sure, you can make a change. Rates are good right now, but you're still going to have a bit of a penalty, and the penalty is normally 3 months of interest payment. So you can determine, I don't know, the exact details of your mortgage, but it's approximately 3 months. So even switching, even if you have to pay that penalty, there's different ways that, you can still save money paying a penalty and switching to a lower interest rate. People do it all the time.
Okay, good.
So don't let the penalty scare you away.
And Riaz is asking a very good question. It says, do we still have first-time homebuyers incentives? So I'm wondering if that government program is still ongoing. Nancy?
So
it is still effective, but the amount of property that you can afford with that type of an incentive is normally around 500,000. So it's not an incentive for the GTA area,
not really,
but it may be a good incentive for the outskirts of the GTA and surrounding areas. Yeah,
that's a very good point, Nancy. Very good point. Yeah. And then
it could also help you get into a condo, a smaller condo.
Yeah, it could be
well.
condo. Yeah, but then
I haven't heard nothing of the home buyers incentive being pulled back. It's
neither have I. Yeah.
It's there. Yeah.
Yeah. Perfect.
So the maximum someone can have as an income to get that incentive is 120,000 family income. You can't make more than that, and they usually take that figure, whatever your annual figure is, and they times it by 4, and that's the amount that they'll assist you with.
Right. Okay. So Sam is asking another question here. I would think it will depend on what's happening with the real estate market. Speaking of which, I joined late, and you may have answered this already, but do you know if the relaxation to the stress testing criteria that was supposed to happen this week will take effect, and when?
Okay. Well, I'm with CIBC. Our stress test a month ago was, we were working with 5.19. Now we're working with affordability stress test interest rate of 5.04.
Right.
However, there are other means of securing a mortgage without looking at the stress test, and that's would be going through a mortgage option specialist.
Okay.
So I'm sorry, just to clarify. So if we're looking at that percentage or that rate, it's Scotiabank, pardon me, CIBC basing it off the applications to insurance providers for mortgages, or is it still based off the major banks' rates?
Well, I'm using 5.04. That's what we've decreased our stress test to. Normally, it's you look at the Bank of Canada and you look at their interest rate for conventional 5-year. I think right now it's 5.19 at the last time I checked. But
so I know. Oh, apologies for interruption. I was going to say, as of April 6th, I mean, I know it was in the news several months ago that they were going to change the stress test to make it that it's not based off that, but it's based off the actual applications to like CMHC for insurance for mortgages, like the rates that they see there and the average there. So
I haven't been, the only update I've been given is to work with 5.04.
Yep.
So that hasn't reached me yet, and I would have had that information.
Okay.
Yeah. So I
I
think
can't make a further comment on that. No.
no. I mean, I'll just throw my head in there as well. I mean, I think Sam is referring to the 4.99 that Barbara mentioned, and I think that's off the table now anyway. So that they're not going by that.
Okay. All right. Okay,
All right.
so I think that's probably good for time. If you have any questions, feel free to reach out to us. Just for the sake of my profession, I would just like you all to know that the information provided here today is just information. All of it's subject to change, and none of this information constitutes legal advice. So if you require advice for your situation, please reach out to the relevant professional that you need to speak to.
So thanks for joining us this evening, and I hope you found it informative. If you didn't get all your questions answered, feel free to contact any one of us via phone or our work emails, and we will help and assist you to answer those questions. But as long as you walked away with some information, that's the main goal for this evening.
Absolutely.
Very good. Yeah, so I'm just going to, speaking of which, Nancy said to contact us. I'm going to share the screen here in case, I'm sure you all have it in your invitation emails, but if you don't, this is our contact information here. Feel free to reach out to any one of us with more questions. If you want, by all means, we'd be happy to hear from you. We hope you enjoyed the webinar, and we hope that we answered all of your questions. Yeah. Thanks so much for joining us.
Thank you, everyone.
Thank you. Have a great evening.
Have a good night.